What's up? Stephen Johnson Stocks coming at you a day later because I had my Christmas party yesterday, followed by another Christmas party. So it was like 12 o'clock till 2 a.m. Being out with some friends and some work colleagues, and it was just brutal. I ended up losing my phone in a taxi, which was sucked. So I've had to spend another 700 bucks on another one. But very sad about that, but what the hell can you do? Bad things can come from drinking alcohol. But reviewing this week, I lost 14 bucks, and I'm pretty happy with it because when the good patterns come, when the good fortune comes, when the good luck comes, you can run away and make a grand 1500, 1600, or I can. And then when you don't see the patterns, or the patterns aren't as high probability, or you don't see as much volatility in the market, it's good to protect yourself and not really lose any money. And I think protecting yourself is as important as making the money. And what basically happened is at the start of the month, in the first 2 days, didn't really see quite the patterns that I wanted, was a little bit too aggressive, and didn't cut my losses quick enough. And when you've got lower probability setups, you've got to cut your losses faster because there's more of a chance of them not working out. But when you've got these high probability that it's 100% coming down short, then you can be a bit more aggressive, build into the position more and cut it, and then basically have a bigger position when it comes down, shorten more aggressively on the way up. But with these less probability setups, you've got to cut your losses. And I didn't cut my losses on the first few, and I paid for it. And then for the rest of the week, I was cutting losses, was taking profits, grinding the money back, and I lost 400 in the first few days, and I made 400 back in the last few days. And now, knowing what I know in the market condition, I'm just want to try and get about to 2 grand. If I can get up to 2 grand this week, that's wonderful. I'm on the challenge with Tim Sykes, affiliate link for Profitly and Silver, and the challenge is below. If you want to buy the Excel, it's still on sale for 50 bucks below. I will be announcing winners for the free Excel and the free 30-minute lesson at the end of the video. Live the dream. Don't drink too much alcohol, it destroys you. And fucking Merry Christmas. I'll be back in England on the next video. Oh yeah, I mean, doing a lot better. I mean, from losing 5-10% of my account for the last 4 months, making 1% and 7% and 5% and 6%. Hopefully this will be around 8-9%. If I could make anywhere near 10% account growth month on month, not year on year, month on month, then that's fab. Trading a bit more, so my winning percentage just dropped a bit. Maybe that's something to take into account. But I lost 16 bucks last week. Didn't quite find a rhythm, didn't quite find the setups, but protected myself and managed to keep that 1600. So when I do have a good month where the patterns do come in, then I can protect myself, only lose a tiny amount, 16 bucks. But when the patterns do come, pull in another 5, 6, 7, 800. And that's what it's about. I mean, and if I end the month up 1600, if I end the month up 2 grand, then frankly, that's brilliant. And there's no reason why I couldn't end up 2 grand up. And people have been asking us to show more the Excel. The Excel you get basically the stock promoters list, the profit and loss, the first gap down day where I've only tracked a few setups. This is when stocks are up and then the gap down for the first time. I've started tracking failures, but I haven't been brilliant at it. But obviously the gap and crap's the main one. Stocks that gap up, what percentage did the gap up, what was the previous day price, what was the highest point pre-market, where did the close on day one, how much did the spike, what percentage did the spike, was it 2 or 3 resistance, how did the close on day 2, how did the close on day 3, what percentage is that, and then started working out like what is the average of all of the stocks that I've tracked. This is what you get when you buy the Excel. It's on sale for Christmas, only 50 bucks. You can buy and then on the PayPal link in the description. I started kind of tracking first green day. These are some graphs I started putting together to work out actual percentages of different things. And this is just a 2-year plan that I've got, that I've always had. When I started wanting to trade professionally, so I was like, lose less than 300. This was back in July last year. And now I believe I'm kind of generate a profit of more than 1,000, make $1,000 in a day. I'm stuck in October right now, but I will make $1,000 in a day. And then I'll escalate through to probably December, January. So I'm on track to meet like 2-year master plan trades. Now, this is the biggest, my biggest loss in a while. Certainly the biggest loss of the week. Put me off in a bad foot. It made me trade a bit recklessly in the opening few days of the week, and as a result, this trade is the single biggest reason why I ended up with
a flat week, maybe because I was down like 500-600 at the start of the week. This play took all of my attention, and then I spent the rest of the week making it back. But it's not the best lessons, but I'll go over it quite quickly because I want you guys to see what I did wrong. I mean, first of all, I traded this. This is an OTC, and I traded it like a Nasdaq. OTCs typically can grind and grind and grind and have green day after green day after green day. And I traded it like a Nasdaq. If you see like a Nasdaq, I was shorting it on this green day here. I think it's up like 3 green days in a row. This has got to come down, and I expected it to come down on this day, on the 11th. And OTCs don't. OTCs can run multiple days and then do it more frequently, where the Nasdaq stocks don't. The other thing is I overlooked that it was in the cannabis sector. I think if we look on the profile, it says oil and gas, but it's not. I didn't read it properly. It says they develop technologies and processes to convert the cannabis plant into medicine therapies. So God knows why it says oil and gas. And I kind of overlooked that, and it's my own fault that I didn't realize it was in the cannabis sector. And the cannabis sector with CENN running kind of recently, and GROW running. They're all running in sympathy to one another, and I overlooked it. And also my fault. Why am I shorting the stock where all the sectors running with momentum? There's a clear catalyst there. And the final mistake that I made was I was a bit over aggressive. It obviously popped, double bottomed. It was in this kind of consolidation zone, and I just started randomly firing big money and thinking this is going to come down. And then I was seeing firing orders in the 67s, firing orders in the 66s, firing orders in the 64s, and I'm talking like thousands of dollars. Like I'm through $3,000, $4,000, $5,000 into this. So as soon as it ripped up, I was just panicking. I was fucked, and I literally took like a $400 loss here, and then I was down $1,000. And then the next day, luckily, I held some because the thinking was always the same. It's up from the 20 cents to the 70 cents. If you go back 3 years, every time it hits the 70 level, it tops. Hit 72, topped. And every time it does, it crashes hard. Here it hit 65, topped. Here it hit 50, it topped. It's never really got above 72. So I was expecting it to fail here because it failed here. It didn't quite get here this time and failed. And then what a coincidence, it failed at the same area again. I didn't know this at the time. I thought it could break out. But this was the reason for the initial short. The fact that it never gets above 72. But I was playing initially off this key level because this was the last key level with momentum, with volume. But luckily for me, the next day it had a massive panic, and I was watching it, and I literally covered all of the position in the 59s. So I got out for, instead of $1,000 loss, for like a $300 loss or whatever. But it was stupid. Again, to recap, OTCs run further than you think. 2, make sure the sector that you're shorting doesn't have a good catalyst, like earnings, like a contract win, like a hot sector. Are you playing against fire? 3, maybe look at shorting the highest level of resistance in previous history, which was 72, because this could have been a couple of thousand profit. I was just over aggressive early and cocky from making $1,600 the week before. Now, PTI is a very good case study for me because what I'm really trying to do is get in and out of trades, manage my position size throughout a trade, and play different parts of the move to really try and make the most of a good opportunity, not just focusing on one move. And PTI was a solid runner. I'm sure back on this day on the 11th of December, when I was up from the 2s to the 5s and spiking on massive volume, 32 million shares, it rotated its floor nearly like 1.5 times. People were thinking this could easily go to 6, 7, 8, 9, 10. And it was on trial news. It's like a biotech. But I was looking at it thinking it's up like 150, 160%. And I've never ever seen in my life a stock go up 200% apart from DIYS, maybe KBSF as well. And they're the only 2 I've ever seen really go truly supernova 300%. So I was short biased, but I was playing it small. But I made a lot of mistakes, and I just want to go through them with you guys. So initially, PTI gapped up on the news. If you think right now, you'd just be seeing this gap up from the 2s to the 560s. So it was up like 160% pre-market. I was thinking this is totally overextended. You can see this move from it actually started after hours. So there's the 2s getting up to the 5s. And initially, I was thinking this is so overextended. And when it was like, you can see pushes up, consolidates, pushes up. But yeah, it kind of triple topped, like top, top, top. So I thought I'll start in small. Just like it was very early pre-market, 7 o'clock in the morning here, and I'll go like 50 shares. Now I went in 100 shares and then it dipped, and that was a bit of confirmation. So I took another small position, 50. So I was in maybe 800, 900 bucks. Wrote it down, and then when it made this higher low, I was just out. Just took 75 bucks, and that's great. But I got a little bit greedy, and then I started in again, and I started in around the 460s, 450s, with no clear sign of it topping out. And then I sized in more in the 480s, and then when it broke high of day in the 510s, 515s, I took a $220 loss. So that was like 130 down on the name, and it was stupid because I mean, top, you've got a kind of a double top, yeah, but when I mean, I remember thinking when it kind of couldn't, it didn't break down here, and then it pushed back through. But I remember thinking, it's, I just didn't cut my loss. I mean, I should have just cut the loss. I mean, one, I shouldn't have shorted randomly. I don't mind this short here in the 467s on the red candles, and then the lower high. You've kind of got this. You've kind of got like say it double bottoms, it pushes up, and then you think, right, it's going to come back down again. I don't mind this lower high, short the red candle, or this kind of lower high, these lower highs, short the red candles, building from the 460s. When it doesn't crash in the 450s and it holds the whole dollar, breaks above 480s, then just get out and you've lost 5 cents. It's like $10. It doesn't matter. But it went on to become a $220 loss, which was totally unnecessary, because when you look at the overall trend, it's extremely bullish. It's high lows, high lows, high lows, high lows, where this was previously just crashing. And that's where I really went wrong. I didn't respect the trend. I don't mind trying, I don't mind shorting the bounce, but when it doesn't crack, when this higher low confirms and then this high low confirms, you've really got to be out in the 480s. You started in the 460s, 465s. You started in the 470s. So losing 5-10 cents is nothing. I would have given back $15, and I would have made $75. It would have been a good day. But when we got into the open, and when this pushed, I was like a little bit pissed. I was like, I'll start in small and I'll average up. It's not going to go 300, 400%. And if it does, honestly, I was just pissed. I was like, so be it. Came down, ramped back up. So I was pretty much short in the 6s, short a little bit more in around I remember hitting high of day. I was short a bit more in the 670s. And I had plans to build in the 7s, the 8s. And I'm talking very small position. I was short like $500, yeah, as in 1,500 in this, by the time we're in the 7s, $1,500. And when you think if a normal position size might be $4, $5, $6, $7, $8,000, being in $1,500 is like a quarter size. So it had an element of risk, but not really, because I was more than happy for it to ramp up double. And that's why you've got to manage your position size to think like, am I comfortable with this going to the 6s? And I was more than happy for this to go to the 6s. I borderline wanted it to, so I could get a big enough position size, and the further it comes up, the further it's got to come down. And then obviously it spent a little bit of time in the 7s. I was never really down more than 100 on this, or 150. And then it came down. We had this long afternoon fade, and then an offering come out and it crashed. And I was only really ever up as like up $100 here because it was a small position. And then in the morning we had the kind of a bit of a gap down, a bit of a washout. I took some profit, and then I tried to build in a bit of a bigger position size. And when we squeezed up here, I got faked out and I got out. But had I have not stupidly lost a lot of money here, I would have played this a bit bigger maybe. I would have been comfortable with a nice average. Maybe I don't know. Maybe I'm making excuses for it, but the bottom line is this was a good hold. And if you keep your position size sensible, if I was up a bit more in the name, maybe I might have held it down to the 470s. This will probably go down to the 370s in the next few days. Now, normally, I never ever go long, but this type of stock is one that I literally just could not resist because all of the stars aligned. And when all of the stars align, you fall in love. And I fell in love with CPAH. The only thing I didn't love is I didn't hold it longer because it was such a gimme. And the reason it was a gimme is because it had all of the indicators, and we get indicators a lot. And a lot of people who are a bit newer will be like, well, I don't know what indicators are. Like, people keep on saying indicators, but what are they? Well, let me tell you all of the indicators. I mean, one, it has literally unprecedented volume compared to any previous history. Two, on this 3 level, it's not just a multi-year 52-week high breakout with no resistance above, but it's also a whole dollar 52-week high breakout with no resistance above. Next, if we just look at the earnings, this is the 13th of December. Let me bring up the earning. Let's have a look on the 13th of December. 13th of December, 8:35. That morning, yeah. This one, that morning, they brought out Q2 results, quarter 2 results. And that's all you need to see. Q2 results. Also in the SEC filings, it's known as a 10Q, the quarterly statement. You don't need to know if it's good, you don't need to know if it's bad, you just need to see a 10Q or Q2, Q1, Q3 results. So they've brought out results, doesn't matter what the results are, they've been good. You find this stock because it comes up on high of day, top percent gainer scanners. So this is a very good play. The next thing that you want to look at is the price action. So this stock has ramped up. It's gone from the 2s to the 4s. And when it was just settling here, it basically held the 350s. And as it was coiling up, I was just thinking, if this gets volume in, it's just pushed from 2 to 5, 2 to 5 pretty much. It's doubled in size on earnings. Unprecedented volume, 52-week highs. So as it's kind of, the wicks are getting bought up here, and this is how I could see it. Popped ridiculously, and normally you don't want to buy these without consolidation, but as it's basing and it's coiling and you've got the higher low, this wick got bought up, which means there's people buying underneath. People are hitting the lower bids when sellers are selling. And I'm just thinking, look, as this bottoms, as this hits higher lows, I'm just waiting for volume compared to prior volume. So it had the big move and then had a little area of consolidation where people are waiting for things to happen. And then you've got one big candle, 40,000 shares. Another big candle, 60,000 shares. And this is where I bought in. I think I bought in, what was my average? I bought in 375 and I sold 440. So I bought in right on this kind of candle here, 375. So I saw the 11,000, then I saw the the 37,000. I was like, this is going to run. So I bought in 375 here. And then boom, I'm a little bit before everyone else because I'm paying attention. And then it rips up to the 460s. And then it gets halted. I sold around the 460. What did I sell at? I sold at 440. So I sold into this big push. 440. Could have got 460. Doesn't matter. I was worried a little bit about it topping here. Then it gets halted. And then it rips even higher to the 7s. And it's really easy to predict. I mean, you just look for the indicators, the earnings, the unprecedented volume, the whole dollar breakout. You wait to see some sort of intraday small consolidation, higher lows, major volume break. You buy as soon as the volume starts to turn, and you see the higher lows, this kind of coiling action, and that's it.
What's up, Jeevan Stunts, and I hope you like the lessons, but the lessons are not all what you're going to get today. The trades. This is a hat that says, I need coffee. Daniela bought us it, and then we broke up. We didn't break up because of the cap, although that would be a valid reason, because it says I need coffee. But no, we broke up because I'm fucking obsessive about trading stocks, and I have a weird thing where I don't understand. Now, it's not that I don't understand, it's that I can't let my life be an ordinary life. Like, it has to be extraordinary. It has to mean something. It has to be fucking legendary, and I don't want anyone getting in the way of it. Which is why I'm on YouTube, which is why all you people know about it, which is why I've been working hard and had a $1,600 record fucking month. It's because I make these sacrifices. But, time to give back. I didn't write all the names in the hat because there's 200 plus and I just frankly couldn't be bothered. But I wrote some names, random ones, wrote spreadsheet or lesson on them, based on what you wanted. And whichever one comes first wins. So, let's see who this motherfucker is. Hope I can read it. Okay. Fons van Samarin. You in a spreadsheet, motherfucker. Send us an email. Let's hope the other one's not a spreadsheet as well. Just one or two. Hopefully this is a lesson that it worked out. Ah, good, it is a lesson. Nicholas Lopez. You in a lesson, motherfucker. All else I've got to say is, like, keep on working hard, keep on living the dream. Sometimes you've got to make sacrifices to get to the next level. Sometimes it's not always great. Sometimes it's one step forward, 2 steps back, 2 steps forward, 1 step back. Comment 1 step forward. No, comment 2 steps forward, 1 step back. If you understand that this isn't a linear fucking journey, it's not a linear process. But ultimately, I have never been more confident that I will be a fucking millionaire from trading. This is just the beginning. This is the very start. Watch this space, I will be a fucking millionaire. And why am I any different than anyone else? Because I've shown the entire fucking journey from day one, where 99.9% of everyone else who makes one video, who uploads one video, fucking fails. They vanish, you never see them again. Where am I 16, 18 months later? I live the dream. 2 steps forward, 1 step back. I'll see you later.